Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. Maybe we just need to wait till Thursdays to do this program if we get the cash to get as excited as it did today. You can see not joining us would be Brad Kooima. Brad is actually at the Iowa Cattlemen's meeting this week, so Joe graciously was willing to step back in. And then, Joe, right before we got ready to record this, you're like, whoa, hold on a second. These markets have gone absolutely crazy. And I think that's exactly where we need to start, to see some bids of 185 to 187 in the north when we've been waiting all week to see a little nugget to show up.
Right. Yeah, we're finally getting that excitement here today. It really didn't start out with any general, lower bids at all. All of a sudden, my phone started blowing up. 85, 86, 87 up here in the north is trading now. I also heard a high beef number too, is as high as 300. It kind of goes to a plant that's maybe doesn't yield quite as good. The south did get some 186 as well, and this all happened quite rapidly, and that finally did get this market excited. There was some bids yesterday in the south of some 182, but obviously people passing into that, but it erupted today quite dramatically, and the futures are taking note too. I know last week we kind of talked about this range that we've been in, and it's not just a small range either. A guy can get tossed around pretty good. It's $4.50, $5 range from the top to the bottom. So you're seeing a lot of coiling action happen on the charts here with last week as well. And today, with the cash market action, you're seeing some of those deferreds finally making a new high for the move. So if we can muster a good close, up $1.50 up front and $1 higher in the back, you're going to make these charts look pretty spicy at high levels too. But we have the funds that are coming in here supporting their positions on the bottom side of the range, and the funds like to buy breakouts, much like they like to sell big sell-offs as well. They're participants with that. So we'll look at the open interest probably tomorrow morning and see if we attracted any more players.
I thought it was interesting, Joe, because early week it was extremely quiet and you were even hoping to get some sort of bid offers. And some were thinking we might not even see any movement this week, knowing where the coolers are at for capacity. So it's kind of intriguing that we see some pick up on a Thursday afternoon.
Yep. Much kind of like last week too. We kind of knew there could be some Friday hours that were cut back, our plant that was dark on some cooler clean out type stuff. And that's kind of what we heard at the beginning of this week too, that Friday, the kills are going to be light, and you heard all that type of stuff. But it's always interesting that some of the bids show up middle of the week, and then all of a sudden you're getting some, cash activity on a Thursday when they're backing up hours. It shows truly how tight the numbers are here. And we're going to see some reflection of that moving forward too.
I was just glancing over at the computer to see what those box beef numbers were. And I mean, both the choice and the select were up. I mean, choice was up $1.24 on a midday on a Thursday.
Yeah, that's also going to reflect the sheer tightness of numbers that we have, as well as the demand at these price levels. We've hung around up here plenty that they can move. And if you're short of a product in general, I don't care if we talk about chips or Skittles or whatever, you are going to probably push the price a little bit higher because you just have less of it available as well. So we're getting some true economics to kind of come through. It's probably a bad example with chips and Skittles, but that's the first thing that came to my head here today. So,
well, it makes sense though. What are you hearing when it comes? I mean, I know you talk about the demand and how tight things are, and we continue to know that heifer retention isn't where it's at, but we're into the throes of calving season. Are we turning the tide a little bit? Maybe some optimism going on within this cattle market?
Yes, I think we're not going to see any data that we can look at, that we can write a number down as far as heifer retention, but I got to think we're getting close to it. I know if you look back at the charts at like 2014, then 2015, 2015 is when there's a large amount of heifer retention, putting them back to pasture. But we didn't get that data till 2016 either, right? It was all in the rearview mirror. So we have to be careful this year that it is set up like 14, where we have tight supply. We also have cheap corn, and we got high replacement costs. just let's not get away from that aspect either. That we will have to do some marketing here, and looking at some put options or some LRPs, I think is just fine. But let's not get too carried away that we have tight numbers and the prices are always going to go higher, because in 15 we did rally into tight numbers, but we also failed in the tightest numbers in the fall of 2015. So that is something that we have to, keep on our back of our minds with these kind of moves here, because we will see heifer retention, but a lot of us are probably going to see it when we get data from it, unfortunately.
Are we taking advantage of the way we've seen some lower grain prices? I mean, you and I talked a little bit about this last week of getting those prices locked in.
Yep, there's a little bit more talk among our producers, a little bit more, or just general interest, like, hey, I can only buy so much physical corn this far out. What should I do? So that there's a little bit more activity with that, which is a good thing. A lot of these corn call options are still relatively cheap, and we've seen the grain market rally here since last week, and that's because these charts are starting to look better. We're just doing little chip shots. We're getting above the 10-day moving average. We're getting above the 20-day moving average. So these funds are going to come out of some of their net shorts that they have in respect to how this chart looks. And tomorrow we'll get a new look at what the monthly conditions are for our ending stocks. And I don't know if I see too much activity the last few weeks to really generate a smaller ending stock number for corn and beans, but we're getting closer to that time of the year where weather is going to start being talked about, the dryness all around. I mean, we got guys tickling the dirt up here all the way to central Iowa. I mean, things are going pretty rapidly here. So it's definitely something to look at to lock in, some nice $4.80 new crop corn or $5 cash corn for some of these guys that are not cash corn, but at least something with the options anyway, that you don't let that get away from us.
Well, we are starting to see the fact that Lent is starting to wind down now that we're into the month of March, which means grilling season in earnest will be starting very shortly. And hopefully, with everything that's been going on, financially, the consumers can still be there to make those purchases and throw them on the steaks on the grill.
Right. Yep. We're starting to turn over that leaf here moving forward, where we got back-to-back holidays that are going to be really good. Mother's Day and Memorial Day. I know it seems far away, but these packers are going to try to will get some of their needs met at some point there too. So that's all right around the corner.
All right. Finally, what's your optimistic outlook as we look tomorrow on a Friday into next week's trading session?
Having back-to-back weeks here where we know there's a less kill, but having cash show up the way that it is rather intriguing. You also have the charts that are looking really, really good at these points. The last 2 weeks, a person could have hedged here near the high end of the range, but we've given almost too many opportunities. Not that it's wrong, but too many opportunities even for a speculator to maybe get short on the top side of this range, be okay if the market breaks to the bottom side of the range. For me, that doesn't work. I would get kind of too carried away and saying that it's a safe place to be trading this range. Cattle market especially does not like a sideways trade, period. It is coiled up, like I mentioned before, and you just have to watch for this breakout. And if that happens, I'm going to guess that these funds will barrel in there in good fashion.
All right. Best way to get a hold of you guys.
Give us a call, 1-800-358-3047, or look us up on the webpage, kkvtrading.com.
All right, Joe Kooima has been joining us this week. Brad may or may not be back next week. We'll find out when the show comes around next week. Quick reminder that commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's this week's Cattle Call on the Rural Radio Network.